Let me start by introducing the panel very quickly. Keith Evans, who last came in, the Chief Investment Officer and Development Officer for Ennismore, managing Hoxton, amongst others. Elie Younes, thanks for joining us, Elie, at this last moment, and maybe you can have your 4-year-old say a few words later. Executive Vice President, Chief Development Officer for the Radisson Hotel Group Global. Thomas Page, the Global Head of Leisure and Hotels for CMS, pristine law firm, and Paul Pisani from Malta joined us as the Senior Vice President, Hotel Development of Corinthia Hotels. I'm honored. I'm Dirk Bakker, and from Colliers, from the Head of Hotels for EMEA. And guys, we're going to talk about what our world looks like post-corona. The whole day we've been listening to pristine speakers and commentators on their views. Our views won't be different. We don't have a crystal ball. We don't. We can basically talk from experience and from expectations. When we read the numbers, I was just going through a few numbers of the UNWTO, and it looks like we're already 500 billion down, and which is a third of all income out of tourism last year. Where's it going to end? China is slowly recovering. Crisis is on its way back in China already. How's that for Europe? Difficult to say. Let's talk about it. We have a bunch of questions that we are trying to go through in a logical order. But firstly, Thomas, let me start. You are in my screen left up. Maybe you can introduce yourself and tell in 1 minute what you're going through at the moment.
Okay, well, Dirk, as you said, I'm Tom Page. I'm the Global Head of Hotels and Leisure for CMS, the law firm. In terms of our business, as a professional service firm, obviously we're not reliant on retail customers, which is a good place to be for us. But obviously we've seen transactional activity fall off quite significantly, probably 20 or 30% over the last 6 weeks. But we're reasonably fortunate as a law firm that we are quite well hedged across a variety of sectors and work streams. So whilst so corporate transactions are down, we've obviously been busy in sort of employment restructuring, finance, and sort of landlord and tenant aspects. Obviously, as people get to grips with the virus and the impact of the closures and what that means for their business and their relationships with their business partners. So obviously we're affected, probably not as badly as fortunately as many of those who've had to shut their businesses. We're very fortunate in that respect.
Yeah, thanks, Tom. That's a nice introduction. Thank you very much. Paul, switching over to you. How's the crisis treating you in Corinthia at the moment?
Good afternoon, everybody. Well, across the board, we have closures of hotels. We've had no choice for various reasons. Obviously, where we are from, island of Malta, we're basically on complete lockdown. There are no flights in or out, and we closed our hotels about 10 days ago. We have one hotel which is still open with a very low amount of business, but the rest are all closed. And the same applies internationally. We have 20 hotels mainly around Europe, and essentially they're all shut. I actually read a very interesting statistic which puts into perspective what we are all going through. Most economists expect the impact of this current crisis on our industry to be 5 to 6 times greater the shock of 9/11. So we're talking something really big here. And certainly from Corinthia's perspective, we've been very busy, one, in closing our hotels, but two, in ensuring the safety and security, both health-wise and also financial, of our staff. That's been a priority. And so far, it's worked very well. We've got plans in place in terms of getting our people together when it's time to reopen, and making sure that we limit suffering to the barest minimum, for everyone concerned.
Yeah, a clear message. I mean, I think we share your views, all of us. Elie, how are you getting through it? You just gave us a little small heads up before we started this meeting, but maybe you want to continue that.
Everybody at home, lights are off, business is out. Most of our hotels in EMEA are closed, literally closed, whether leased, managed, or franchise. The vast majority is out. Even the ones open, you can consider them closed because it's costing us probably more money to keep them open than it would have to shut them down. So really, business-wise, lights are off. Main focus of the business now, like everybody else in the industry, is to try and keep the business alive as much as possible. Every day between the survival mode and kind of what is tomorrow bringing to us, and is there an opportunity into that? So this pivot approach is really what is making me busy every day. In the morning, I say, hey, we have to try and protect everything. Let's have a defensive approach. How can we make sure we protect the portfolio, make sure we work alongside our existing owners? By the afternoon, I sit and reflect and say, hey, what if this is going to bring opportunities in the future? Try to have a more optimist approach to things and reflect on that. So that pivoting is what I do every day.
Yeah. Yeah, we're also, Keith, is with you any different? Any other things in your side?
Well, hey, good morning from the U.S., everyone. And no, I mean, I think our friends and family across the hotel industry are all feeling this pretty significant impact across the board to a great degree in similar ways, although every company has its own characteristics and challenges in this time. You know, we're a private company, and we have a strong balance sheet and low leverage in our propco, and a moderate-sized portfolio. So I think some of the challenges we have might be different than some of the larger listed companies and different business models, you know, across the sector. Like most of the companies, our portfolio is closed both in the U.S. and in Europe, and we're, you know, making recovery plans and contingency plans around an expected timing of when the hotel will be open, and had to make certain business decisions around a certain base case. The difficulty nowadays is obviously assessing what is the base case. You know, what does the recovery look like? When does it begin? And what's the curve of recovery? So I think we're all going through that same challenge, and I think that's why forums like this are really interesting to share ideas and get perspective from different people across the industry. But yes, I mean, we're principally an owner operator with most of our portfolio owned. So there's a lot of focus right now, obviously, on the asset management side of the real estate portfolio. If there's a silver lining to all this, I think that there is still, we're seeing progress still on the HMA side, as well on the investment side. So whilst our operations are shut down, the team is working really hard on, you know, the next phase of the evolution of the company through new partnerships and new investments. And in some areas, the activity's actually picked up. So it's a recalibration as we go through this period of distress, which we're all hopeful ends sooner rather than later.
Yeah. Well, Claire, maybe you mentioned the word recovery. Let's take a wild guess. Are we going to be getting back to business like China is slowly getting back on their feet, where occupancies are moving up to 40% already again, going rather quickly? Do we anticipate something like that happening in Europe in the next 2 months? Tom?
I think it's a very difficult one to know without knowing how we get out of the lockdowns and what that'll mean for international travel. China obviously benefits from a huge internal market, perhaps not as dependent as Europe is on cross-border travel. There's a lot of, you know, base business within China, if people can travel within China. I think even once we come out of lockdown, there'll be questions as to what extent countries are willing to let people from other countries into the countries without, for example, having, you know, tests or some proof of vaccination or other things to prevent, you know, re-importing the virus and starting off another thing. So I think those countries that will bounce back quicker are potentially those that have big enough domestic markets to be able to bring that base level of business back to their hotel markets from, you know, primarily domestic demand, whether that's leisure demand or whether that's business demand. So I think, you know, perhaps, you know, the UK may be a better place for that, the US, but certainly resort locations, I think will struggle with people's, you know, lack of willingness to go longer distance or be able to even move. So I think it will vary, and I think, you know, until we really know what our way out of this is, it's very hard to predict at what stage we'll be back at that position.
What's your view, Elie?
I don't think we have a clue. Our hotels in China are open. We have 2,000 hotels in China through our shareholders. So most of them are open, and indeed occupancies are in the 30s, 40s. Doesn't mean the hotels are making money. As we all know, at 30% you still lose money operationally. So opening a hotel and getting 30% occupancy is not sufficient to pay your electricity bill to some extent and in some areas. So the question that we need to ask ourselves, when do we open the hotels, and at what point the hotels will start being operationally profitable, and then ask ourselves, when will the market go back to the previous levels? 1 year, 2 years, 3 years, 4 years. The last crisis, 2008, I was just looking at the figures earlier this morning. It took on average a European hotel 6 years to go back to the previous peak. 6 years. That was after the financial crisis. Of course, the markets like Paris, like Munich, like Frankfurt took less time to recover. And if you look at the previous crisis, the markets, and as Keith just mentioned, the markets that were the more domestic market, the reliant on domestic travel, will probably recover faster than the others. But still, 6 years. And that was an easy crisis if you compare it.
Yeah, but I mean, Elie, to interrupt you there and to repose that question, there is since the last crisis, which is more than 10 years ago now. Yes, it took 6 years, but we also have a different spending pattern. We have different travel habits nowadays. The amount of brands that hotels like your hotel group also have nowadays has been much more, because it's all experience based. In those days, that wasn't the case yet. The mix between leisure and business travel is a different one too. So logically, you would assume that will take shorter this time.
I think all of us are hoping indeed that it will take less time to recover this time, and this is a hope that we all have. But if you look at the gap between where we are and the recovery, is much wider than it was last
year. Yeah, true. Keith, how do you see that? Can you, with your new brands and relatively fresh and ownership-based company, do you see? Have you got a different view? Do you see opportunities?
I mean, I agree. We have to have a baseline set of assumptions for making certain decisions, and then be quite agile in terms of maneuvering through the reality of this, as it will change kind of week to week. The way we're seeing things right now, I mean, if you take an assumption that there's not a substantial second wave that's worse than the first wave come winter time, and on the assumption that there is some form of vaccine in 2021 over the course of 2021, then our kind of baseline set of assumptions is that some or all of the hotels will reopen over the course of Q3, and not a specific date. And then you're operating at that kind of an operating loss probably in Q4 as well, with occupancies in the kind of 20 to 40% range, best case. Again, on those two really key essential assumptions around the second wave not being as immense as the first wave, and that there's some vaccine visibility in 2021, a very slow recovery in 2021, and not to the point of 2019. I think we're a few years away from getting to where we were in 2019, on the basis that some people will change their travel patterns, whether it's corporate or leisure, and it'll take a period of time for that to recover. Whether that's just business meetings going more online and less face-to-face, or whether it's people that still have certain reservations over travel for a period of time. I think that is something that we all kind of will have to see how that works out. But I think eventually human nature is to kind of come back to the way we were, but it will take time. And then the macro impact. The macro question is still the big question for everyone right now. And that's all directly linked to how prolonged this initial lockdown period is, because I think most people are preparing to the kind of middle of the year and having contingencies plans around that. But even as you move into Q3 and there's lockdowns, governments will come under pressure, more companies will not be able to sustain themselves, and then the kind of prolonged period of macro impact will be even more severe. So I think the macro recovery will take time as well, and but hopefully we'll recover kind of with a high correlation to travel. But I think we're a few years away before we see 2019 levels again.
So,
Keith, I've got a question actually that comes out of what you said in terms of expecting to reopening in Q3, but losses through Q4. It's, you know, you're mostly an owner-operator at this stage, although you're in the process of changing that, and you're well capitalized and can probably fund those losses. But maybe for the others, for managed and franchised hotels, do you think owners will want to reopen and start repaying managed and franchise fees if they're still running at a loss? Will they want to fund those losses, or will they want to wait until occupancy has returned to levels that they can actually at least break even?
Yeah, no, it's a really good point. I think no matter what point you open, you'll probably have a few months of operating losses, just by the nature of, you know, operations. From the day you open your doors, including pre-opening, you're going to be in losses for your first couple of months. I do think that there's going to be some interesting discussions between owners and operators around fee arrangements, around recovery plans, and there's going to be a lot of contracts across the industry that are restructured, whether that's HMAs, franchises, leases. So, you know, if there was ever a time where owners and operators need to be partners, now is the time. So it's going to be challenging, and I do think people will put it off as long as they can, reopening the hotels. But then they will also be considering their employees as well. As you know, furlough programs or others start to unwind, and you have to make even more difficult decisions, I think that will play a factor as well.
Yeah. So let's. I see a lot of questions coming on the chat next to my screen as well. Most of them are in line with what we have planned to discuss. So basically, the hotel contract and coming out of the crisis contract situation, we have an expert in this panel, so we'll get to that subject in a minute. So basically, to conclude the previous subject, 2020 is a write-off. Paul?
It very much depends. I mean, obviously, no one really knows. We are planning for it to be very low in terms of business. I think here is there's a lot that the hotel industry has no control over. You know, if we think we've been hit bad, one just needs to look at the airline industry. You know, and one wonders how many of those airlines will still be around when this is all over. But that's a key consideration when one talks about recovery, reopening, because if the world starts to heal, which it will do at, you know, different speeds, I think, depending on geography. But once all that happens, we still need to bring that business to our destinations first. And therefore, a lot is dependent on countries opening their borders, aircraft starting to fly, people starting to feel comfortable to actually get on a plane with 250 other people and sit there for 3 hours and be confident that they're not going to get unwell again. So I certainly think it's going to take time. And I do believe that a lot of what we've all been through in the last 3 weeks, 4 weeks, even in terms of being more aware of basic sanitization, I think all of that's going to become part of our new normal going forward. And all of this will impact how people will travel, when they will start to travel, when they will start to travel internationally in addition to just domestically.
Yeah.
So that was the long answer, but the short answer is, yeah, I expect all of this year to be, you know, very bad in terms of business, and it will take a while for hotels to open with confidence.
Yeah. So apart from contractual situations, what permanent changes and permanent effects do we anticipate coming out of this crisis the moment we get out of it? Business travel, will it diminish, and will leisure become more important over time, and how long?
I've watched a lot of the sessions on today's conference, and the general feeling is that business travel will certainly be impacted by all of this. Certainly, we're all learning to make better use of technology that exists, and no doubt this technology, like the technology we're using today, is just going to get better. So certainly there's that. But also there's companies like us who will be in recovery, but still seeking to do that as cost effectively and economically as possible. So certainly business travel will be impacted. I believe leisure travel will come back quicker, also because after spending a month or two inside, people have an innate need to get away from their homes. So it will happen, but I believe one is looking at 12 months to 18 months before we can start to see this happening on a global scale.
Yeah. So do you expect any technological implications happening? For instance, we discussed it in China. You see this happening when you enter a building. They take your temperature. Will that happen in airplanes? Will it happen in hotels? Will we have different air filters in hotels, Elie?
It will accelerate probably the use of artificial intelligence. Probably. I generally don't know, but I wouldn't be surprised if suddenly the only place where I remember having to go through these machines is in Cairo recently, and they were not checking my temperature; it was checking something else. But I wouldn't be surprised if suddenly in hotels and in airports you're suddenly doing that, or in any very large public spaces.
I think it's interesting. One of my colleagues in Israel says they've got an app there, and the government effectively tracks where everyone goes, and actually it reports if you've intersected with somebody who is subsequently reported as having shown symptoms of the virus or been confirmed as a case, so that you can see whether or not you might have interacted with them. Now that's the Israelis perhaps are more used to that trade-off between privacy and security. But query whether other countries will move that way in terms of populations accepting some limitations on privacy in exchange for that security and health security. There are technological ways of effectively limiting the effects of this, or the likelihood of reinfections, etc.
Well, one thing with real technology, Dirk, is that I think the operating model will change a little bit. And this is the good thing that will come out of this. We will all learn to manage the business in a more lean way. We would probably all learn to transform our P&L from a fixed cost structure to a variable cost structure as much as possible. Obviously, if you have a fixed lease, you have to pay your lease. But in general, running the business today or before COVID-19 was predominantly a fixed cost business. And because of that, I think a lot of us will learn to be a bit more leaner and transform the operating model towards a more variable cost.
So that's one of the questions that came from the audience as well, because I can see these questions coming past my screen here. Logical one also for you, Tom, but also for you, Keith, is the alignment of owners and operators. Is any change going to take place there? Logically, you're both in the same ship. You're forced to talk to each other, and there's no point really saying, "Look, you owe me money for your lease. Why don't you pay me when we can't pay?" Are there any changes that we see happening? Elie just made that proposal, basically. Tom?
Yeah, I think in relation to the managed and franchise scenario, I think in relation to hotel closures, generally both parties have been reasonably aligned. I think as we come to reopening, I think there will be a lot more tensions. Certainly if you are an operator, for example, who's got multiple hotels in one city, you may prefer to open half of them and have half of them fuller and the other half empty, rather than running them all at 10% occupancy. But that's not necessarily in the interests of your owners, or certainly not those who are the non-opened ones who are still running at losses, whilst the others are breaking even or making profits. Equally, operators may want to reopen hotels at a point where there just isn't enough market demand. I take Keith's comment about any hotel reopening is going to run at a loss for a while until it builds up business. But obviously, that's to do with stabilization and getting the hotel back into the visibility of the market. But if there's not sufficient market levels, generally occupancy in that city, to run hotels at a break even or profit, then there'll be tensions between operators who want to start re-earning fees and have assets open and available for guests who want to travel or are able to travel, as opposed to the owners who may not want to continue funding losses for extended periods of time if there's not much visibility on when those occupancy levels will return to a properly sustainable level. So I think there will be tensions there between owners and operators, and I think that's going to be a challenge for them to communicate and ensure that they, that they take those decisions jointly, and not, and because too much self-interest is going to cause a great deal of problems.
I think this is true, but we need to put things into perspective a little bit here, because during the period when the hotel is indeed losing money and yet open, the hotel will be running at very low occupancy levels, and the operator's earning is based on the revenues. So the revenues will likely be very low, and hence the invoice to the owner will likely be extremely low as well. So I do agree that there will be discussions on that front, but we have to be mindful, that it's a percentage of revenues, which anyhow during those difficult periods will be extremely low. So the cost from an owner's perspective will be equally low or to some extent insignificant.
Keith?
Yeah, and I think I mean, by nature, right, there'll be people looking at different forms of sharing risk, as the ramp up comes on, and when they're having discussions around the opening date, waiving fees, subordination, all that kind of stuff will come into discussion. I also think there is definitely a third leg here, which is a pretty loud voice in some situations, which is the banks. I don't have a great deal of visibility personally on what the banks are doing and what their intentions are in terms of, do they want the hotels to open as quickly as possible? Do they not? How are they looking at waiving debt payments for how long? When will they be in a position where they start enforcing any shortfalls? What provisions are likely to change in the lending community around non-disturbance agreements and things like this, in terms of moving from kind of where their positions were today into the new world? It'd be interesting to know, I'm not sure if anyone on this panel knows of how banks are orientating themselves towards a quicker reopening of the hotels or a cash flow forecast approach, i.e. you only open when you think you're going to be in positive cash flow as quickly as possible. I'm not sure if Tom has dealt with this or anyone else on the panel, but I do think that voice is going to be an important one in the context of both investors and their discussions with the operators.
Tom?
Yeah, I think I have been having a number of discussions, both today in our sponsors booth and also previously with my banking partners, who obviously speak to them on a daily basis. And generally at the moment, the bank's obviously focused on the immediate problems rather than looking at reopening. Obviously, they've got a huge amount of requests, both for sort of initial waivers on covenants, interest payments, etc. So they're busy dealing with those. Plus, they're also dealing with requests for, drawdowns on existing facilities, where businesses are looking for increased liquidity to cover short-term losses. Also for new loans, where they didn't have loans but are looking for, government-backed loans or whatever, depending on which country you're in and what's available. So I think the banks at the moment are focused on the here and now. But generally, they are, off the back of the last financial crisis, they are much better capitalized. They are much more secure. In many cases, they are getting significant government backing to provide loans. So I think, they can't afford to enforce loans. They can't afford to be aggressive, because what are they going to do if they take a hotel back? They're not going to want to take on the operating losses, the employee costs, and they've got no one to sell it to. So, or not at least at a decent price. So I think the banks are going to have to be pragmatic. At the moment, they're slightly kicking the can down the road in terms of covenant waivers and interest waivers. They're not giving anything away, and mostly they're deferring longer term decisions about covenant breaches, until we're further down. So I think, what they'll do in terms of reopening, I think we'll need to wait and see, how they react. But I think in most cases they will probably be pragmatic.
But does that also count for areas like Greece and Spain and Portugal and Italy? You think, Tom?
I'm less familiar with the banking markets in those particular countries, but I think had this happened 3 or 4 years ago, those countries might have been more of a problem. You're right, but I think in a lot of cases, those countries which did have big liquidity problems, 8 years ago are not in the situation they were then, and many of them have bounced back quite strongly.
They did, but at the same time, if you look at some of the reports that come out out of Oxford and also our own research at Colliers, if the dependency of tourism in those countries is much higher than in Northern Europe, and they're much more dependent on international travel than on domestic travel. Do we see that as a risk, or do we see that as an opportunity, Keith? I mean, I know you're looking obviously for opportunities also. What is your view on that?
Well, I have lots of friends and colleagues across the Mediterranean, and I know how important every summer season is. And so I'm incredibly hopeful that there's some form of recovery to the Mediterranean markets this summer. I don't think anyone knows that answer to that question right now. I spoke to a number of friends and operators in Spain that some of them are still hopeful of seeing a summer season. Obviously nowhere near what it was last year, but are hopeful that some of the hotels will open and flights will recover. It's difficult to assess to decide. I think there's definitely a lot of exposure there, right? Because as you know, the banks have become more active there in recent years. So there's been a lot of refinancing activities. Some of the portfolios across the Mediterranean have a higher leverage than they did in previous cycles. And that's a concern, right? If you don't have your summer season, or if international travel takes longer to come back. I'm hopeful for my friends across the Mediterranean that it does come back and that there is a summer this year. I'm not sure if Paul has a kind of a more insight to the planning around that. But I think there's more exposure there.
And absolutely, I think the Mediterranean is completely dependent on international travel. Barring one or two countries, there's no country big enough to sustain itself only on domestic tourism. Just to go back to the banking issue, from what we've seen is exactly as Tom said, banks at the moment are focused on the immediate problem. So, long-term decisions in terms of reopening of hotels and all of that haven't really been part of discussions. It's about facing the immediate problems. And while, not everybody has given the exact same response, in general, we have found banks to be open to discussion because obviously it's a wide problem.
Yeah, I think there's a black box here that should be addressed as well, that links somehow to the banks and to the owners issue, which is the business interruption insurance and the extent to which, or if at all, the current events trigger that business interruption insurance to kick in. And for some hotels, I wouldn't say in all jurisdictions, but certainly in some jurisdictions, this should apply or could apply soon. I haven't seen anybody paid yet through that insurance, but I would be keen to understand from everybody on the panel and beyond the panel if anybody has experience or has been paid or promised to be paid by his or her insurance.
Interesting one. I haven't come across that myself. Anybody on the panel?
I haven't seen anyone being paid. Obviously, we've had a number of clients who've asked the question. Most tend not to be covered for this type of risk on their business interruption. Most business interruption is limited to physical damage. Some people have got epidemic or pandemic risks covered as an additional extension to their policies, and some of those are looking at therefore making claims. Others are finding that they thought they had an extension, but the exclusions mean that for some reason they're still not able to claim on a technicality. So I think it's still, though, a relatively small part of the total market that has cover, and with hindsight, obviously they're the wise people who've taken that on, but it does seem to be the exception rather than the rule that have that. I think it's probably in any event too early to be looking at payouts, because no doubt the insurance companies are besieged by all sorts of people and all sorts of claims. Not less sort of all the travel interruption claims from consumers who've been prevented from traveling. So I haven't seen any payouts yet, but there are some people who are covered, but not many.
There you go. Now, so a couple of questions that came out of this discussion, I guess. One of the questions I also saw on my screen, Elie, is directed towards you. Will big brands like yourselves, will you come out of this crisis losing some of your negotiating power with owners, or is it a change of it's going to happen in renegotiation is going to happen?
In some cases, yes. In some other cases, no, because it depends on which owners we're talking about. Because you have to remember, after this crisis, there will be a desperation for revenue. So the first and the fastest company or whoever it is to get that revenue back into the hotels is probably the winner. And if you have that competitive advantage, I think that will give you the competitive or the bargaining power with the owners. On the other hand, there will be a lot of negotiations from the owners and learnings. They will try to probably add some new bells and whistles to the contracts. On top of my head, if I was to guess today, I don't think there will be fundamental changes. There will be some adjustments, but no fundamental.
If you look at from where I'm sitting and looking at the Colliers practice, we've been called in for help from quite a few operators on selling off some assets. It could be white label operators, could be some owners, could be some leases. That we're talking about. So there's quite a few on our desk already. How do we see this going forward? People who have leases on their balance sheet, obviously they have fixed costs, they have a lot of staff to deal with. Developing companies going forward, how do you fund your developments? Do we see some changes happening there? Is that model going to change? What do you think, Paul?
We only have one lease on our books, so our main experience is not in leases. Possibly Tom, and I'm asking Tom this to confirm more than anything. I think very much owners and lessees and lessors will have to get together to find a way to make this work. Historically, many operators stayed away from leases just because of this element of risk. But now that the risk has manifested itself into something real, all parties are bleeding badly. Tom, have you noticed any change in leases?
Obviously, again, too early to say if there's going to be any change in the future market, but I think leases were already becoming less popular with the bigger operators because of IFRS and stock exchange valuation issues, and I think this will only accelerate that. And I think those companies that had still been willing to take leases, operating leases on a large scale, will inevitably, I think, rein that back and look to have a more mixed model, because I think this just highlights the systemic risk of having leases across your whole estate in this type of scenario. So I think potentially those that are being lease heavy will have to change their model going forwards. I think in terms of how landlords have reacted, inevitably most landlords have had to, again, like the lenders, be pragmatic, as they can't really enforce. And in some countries like the UK, there's actually a moratorium on enforcing. In most cases at the moment, again, a bit like the banks, the sort of the short term here and now is just to defer the problem by agreeing a rent deferral initially, but that just delays the inevitable, because how will a tenant afford to pay 2 quarters worth of rent next quarter, or even over the next year if it takes a while for occupancy to return? Some of the more imaginative solutions are things like actually extending the term, so actually agreeing to waive this quarter's debt in exchange for putting a year on the end of the lease, so the landlord's got a longer rental stream income commitment. So there are things that can be done in that respect, but I think inevitably this is going to make people revisit the risks around lease businesses. I think with ground leases, we'll have to see how long this pans out. I think tenants with ground leases obviously have got more interest in ensuring that they fund losses in order to avoid losing the capital value in their lease, whereas operating leases at full market rent, they're easier for tenants to just hand back the keys if they can't afford the rent. So I think if this extends out for a long time, we may see more problems with the ground lease model coming to roost. But well, that depends on how long this.
Perhaps countries like Germany and Holland, who highly depend on leases, will change the management contracts and franchise contracts from now.
Maybe. I mean, from the investor's perspective, I suppose it probably doesn't make a huge amount of difference, because if you're not earning any income, whether it's rental or trading income, then you've got that risk already. But perhaps it'll make landlords realise they're not quite so, rental income is not quite so secure. I think many landlords discovered that in the last recession, that just assuming that that rental income is a dead cert, whereas trading income isn't, is a bit of a falsity in relation to hotels, where you're always at risk in relation to the quality of the underlying capability of assets to earn income.
It goes beyond that a little bit. It goes to the profile of the investor. The more institutional the investor is, the more you would need to do leases, whether not because they don't want a management contract, because they cannot do a management contract. And this is why Germany, Italy, Spain, Holland, all of these places where you have a lot of activity or capital from institutional investors, you have to do leases. So maybe I don't see a move to management contracts so long you have institutional investors. Maybe an adjustment or modification to the lease contract.
Guys, we have a few minutes left. Yeah. I think let's move to a final question and remarks. I have a question for all of you, basically. What is the one thing you will have learned from this crisis that you will avoid at all costs towards the future? Who starts?
I can start.
Huh?
I think a key lesson here is that we can't take for granted that today's normal will always be today's normal. The world has basically fallen off a cliff in 3 weeks, and certainly our industry has. And I remember just a few months ago, we were sitting in budget discussions with our various owners, and we were looking ahead at a great year across the board. Yeah. Certainly that hasn't happened, and that's why I said I think the key lesson here is be prepared and be aware that things change quickly, and one has to be nimble and quick to be sure that whatever needs to happen in the short term happens.
Yeah, Keith.
I think there's a lot of learning ongoing right now. I would say one of the things that we're looking at and spending a lot of time on right now is how to reprice risk. I think that is going on across the board right now. And by the way, that's both from an investor and from an operator perspective, right? Investors are looking at how to price things in the new world that we're in right now, and that's on one hand business plan, and on the other hand cost of capital. We're seeing this play out in the public markets. That's where it's most visible right now. And different business models are being priced differently. We're starting to see it in the debt markets, and we're going to see how that flows through to underlying real estate transactions. So, I mean, pricing of risk, and where appropriate, getting as much downside protection, and really looking at those downside sensitivities. I think a lot of people focus on their base case underwriting and don't really look at the range, the volatility in on the underlying return on capital, both on the upside and the downside, but with more focus on the downside as we ride through this cycle.
Thanks to Tom. Elie?
I think both points were valid. If I was to add to that, would be working capital. Do not underestimate the need to plan your working capital more prudently. I think everybody was planning the short-term liquidity in such a way to take things for granted, to cash to flow in. And we should never underestimate the need to have sufficient working capital. It can get the company go bust.
Clear one. Last but not least, Tom.
Yeah. Well, I think everyone's stolen most of my points, but I mean, I remember I was heavily involved. 6 months of my life went into buying the Meridian back in 2001, which is a £2 billion transaction. Unfortunately, completed 6 weeks before 9/11, and it was said at the time no one would write that type of event into their underwriting. And I think we need to learn the lessons from these type of events that we can't just assume, as Keith said, that base case is going to be what's happening, and we need to ensure that our businesses write in the potential downsides that can come from these types of events, and we need to ensure that we keep the cash. And I think you only need to look at the operators, the big global operators, and the different levels of debt and cash they have. And I think we might see more coming out of that in terms of the different reactions from the operators based on which ones have large levels of cash and low levels of debt, and those that are very highly leveraged. So keep a good cash reserve and make sure you build in the downsides into your base case.
Excellent. Well, this was it. Anybody from the panel that still wants to say something? Now's your time. We've a few minutes over time. In that case, thank you, Paul. Thank you, Tom, Elie, Keith. Be safe, be well, and I hope to see you all very soon. Thanks for great.